The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Friday morning. I'm still in Florida. They canceled flights again to go back up north yesterday, which was amazing in itself. But we're going to get right back into the S&Ps here really quick, just to kind of give a heads up on the marketplace before we get into some individual stocks. And as you can see, I'm showing the scanner. I'm showing the speedometers up top. And I talked yesterday a little bit about the Brett showing some first signs of maybe some cracks in the armor here, and the S&Ps maybe having a chance to change direction, at least temporarily. We've got a new box to look at on the dailies here also. So, why is this important? Because as we look at our breadth numbers, which you guys have access to, we've got almost 80 stocks now that we're trading below profiles on our, that are trading now above profiles, or below profiles, excuse me. And as of yesterday, that number was in the 40s. So we're starting to have some rotation down below. And if you can look at our 60-minute and 240 minutes, which, aren't incorporating what's going on pre-market this morning, but as of the close yesterday, we just, we started rolling over. So is this good news for longs? Probably not. Does this mean that the long-term trend's in danger? No, not yet. We come off the all-time highs, a couple of S&Ps, but it's just some signs to be aware of. And what I did is I pulled up our stocks that we're looking at that are trading below profiles on our daily, which means that we're getting into an imbalanced situation right now for 79 stocks. And that's actually starting to get pretty populated. So let's go right into our S&Ps, that being said, and take a look at what's going on here in our March contract, and the unfair highs 21.1775. Now in our new profile, down below 20.8445. So yesterday, as you can see, we reached a low of 21.0150, and those unfair highs are 20.9950. They haven't changed, so that was tested, and now we're kind of ramping back up off of that area. But that particular level, if we look at it from a pure technical analysis standpoint, that's been the the intermediate fence, if you will, for longs, and it's held. But when we have a new profile up here like this, and we have higher lows and higher highs on the current profile, that's not that much of a damaging event when it comes to the long-term trend staying in force. Well, that long-term trend can stay in force if we retest 2072, 2074, and that intermediate bounce point at 2084 is a little bit higher. I've talked about a lot of numbers already, but what does this all mean when it comes to moving forward? Summing up the S&Ps, you've got the breadth starting to crack a little bit. You've got a new supply area popping up, i.e. this new profile on the daily. Longs really don't have any good trigger points right now. You're going to have to wait for this particular market to come back into support to try to pick battles a little bit lower. Now that we've tested this and we're kind of hovering around this 2106 area, again, long-term trend is up. Can't fight that too much right now, but we may have a relaxing moment here and come back down into the 2084 and then down actually into the 2072, 2074 area. So longs beware. We're starting to see some stocks roll over, and it's not time, in my opinion, to start looking at, and here's our 240 view, to start looking at backing up the truck from the long side. You at least need to sit tight and wait patiently. Now, guys who are traders who want to get into the stocks and indices immediately, you've got some pretty good writings on the wall here, because this 240, if it's broken and that breadth starts turning a little bit more south as we look at it on the speed dials, we could make a rush past that 20.9950 area that we kind of used as supporting mechanism and start really getting down into that 2084 area and then to 2072, 2074. But I wouldn't get too excited until we started getting at least 240 closes below this 2104 area. Okay, here's the weekly. Runaway train still. Don't be the guy who tries to pick the high print on the short side and having to keep cover. That's the theme on that one. So let's kind of move forward and let's take a look at some of the other things that are in play. And we got to take a look at crude oil at this stage, because crude oil, we were kind of, let me see, that's not crude oil. Here we go. So yesterday we were looking at this 50 area to try to hold up here. We had the close above and the retest, and that retest really just kind of caved in. So we play the odds, and we were looking at crude oil from let's hope that crude oil hangs in there to try to force this XLE to possibly move higher in some of those oil stocks which are sitting at support, to try to catch another bid or a bounce. Right now, this is not the end of the world. We're still trading 49 bucks a barrel, but longs are going to have to wait until we cross the border again at 50.13 and close above. And any stop outs around that area as we come back down below, if that happens, you're just going to have to take your medicine. I still don't feel that this particular commodity is in danger of falling apart yet. I think there's a lot of bets both ways. There's going to be some volatility, and some of those oil stocks have showed their hand. Now I'm pulling up the XLE here, and we talked yesterday. This is the ETF. This is not. Again, from a relative strength standpoint, we talked about 80 trying to hold up. We crossed the border 79.37. If you're looking at this as an accumulation area that we talked about yesterday, down into that 78.81, that's going to be your maximum buy point. And yesterday we reached a low of 78. Let me make sure that's right here. Hold on 2 seconds. 78.81. We reached a low yesterday of 78.95. So we've come off of there. Crude oil doesn't look like, to me yet, it's in danger of just completely falling apart. And I still think that the bid may be in this oil stock XLE category. Some help from crude oil would be nice on this, but make sure you put your stops in. Stops can easily be oriented, as it was on the weekly, around 80 and also below 78.81 based on your appetite for risk. We're going to get to some oil stocks just to see how they acted a little bit later. Just need to pull out some of the things that are pressuring the marketplace, things to be aware of first. Let's take a look at gold. Gold is, again, in my opinion, it's not a long or a short right here. This is kind of a sit on the sidelines. As you can see, we retested again that 1222 area almost to the tick, and yesterday, and that's kind of the lid right now. We'd like to see this cross the border above and get a close above stories before we start looking at this from any type of long side. So that's the way gold's sitting right now. Let's take a look at. We're going to pass on silver right now. All right, we're going to take a look at the XLF, because this is the one. This is one of the stocks or one of the ETFs that I was really focused on from the short side, and we picked a battle there, and then we've got another situation sitting right here. 24.47 is at unfair high on the weekly, and also 24.51 on the daily. So that's proven to be a little bit of a resistance. I still think you could possibly bank against that type of fence with stops above, give it a little noise factor, and we're going to have some initial targets at 24.402 and even lower, in my opinion. We got to take a look at the notes and bonds here before we go to the first break. And let me pull that up. Still a little bit on the road, hard to find things when I need them real quick. Let's see. Ten-year. Talked about not getting too excited about shorting against these inflection points. That was a target-rich environment. We didn't have a close above. We obviously pulled back. Now support, in my opinion, you've got a decent trade opportunity right down here at 128.04. We're going to stick with that. These are the notes. The bonds actually are a little bit more violent situation, usually on the volatility, but that's where we had talked about trying to leverage the 144.08 area on the pullback. And still not a big fan of shorting bonds or notes. And you've got support around and ability to put stops around 145.28 on these 30 years. I'm going to go ahead and throw this out there because TFNN gets on me about this. I don't do it enough. Callers on the U.S. side, 877-927-6648 and 727-445-1044 internationally. And we're going to take a look at one more thing here really quick before we go to the first break. We're going to look at our currencies just to cover the usual suspects, give you a heads up on what's going on with the euro, still the gift that keeps on giving. Again, my stops are above 144.47. No change in that. We've met some targets down below as of yesterday with that bottom of the box on the weekly, 112.45. I think this thing's going to drift lower. We talked about that. That was a target-rich environment at 112.45 initially. Right now, we're just hovering below there, and I think this thing could continue to fall apart. On the fundamental side, I'm a big fan of this just continuing to drift lower. The yen got that bounce back into the inflection points that we were paying attention to, which are around 119.44. I'm a big fan of just waiting patiently until this thing closes above, and it could be a runaway trade again on the north side. Okay, dollar. What a move. Talked about staying away from this on the short side, blocking the short side out. My stops are still below 93.67 on the US dollar. And where's the targets above? The initial targets are 95.85, and a weekly close above there is just going to be another move up, more than likely, on the US dollar. We got to get some numbers on the DAX really quick. This is one we're blocking out the short side again on this. This is very euro dependent when it comes to default moves for the most part. 11.341 pre-market right now, and new box appearing. But again, I just just do not stand in the way of this. This thing could go a lot higher, considering the euro could come down to 109 easily, which is another 350 ticks below where it is right now. Numbers on the NASDAQ, no new information yet. Actually, we do have new information after the show yesterday. We got a profile that's appeared. This is actually relatively bullish for the most part, but again, you're going to have to look towards the 240s to start looking at this from any type of leverage point. Breakdowns below 44.34. We're going to talk about that when we get back from the break. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Guys, welcome back to the show. We're taking a look at the NASDAQ just to sum up what we were talking about before we left. These are the 240s, and we talked about this was obviously the stronger of the indices between the S&P, the Dow, and the NASDAQ, and there's no really breakdowns here. In fact, that's a pretty bullish situation down below. These indices kind of run together, as you guys know, but any breakdowns below 44.34 going to have to be paid attention to. You're going to have to take a look at also the breadth here on the NASDAQ, and as you can see, not a lot of slough off here in what's going on with the NASDAQ as far as breadth goes. Okay, let me take a look, read something here. Yeah, we're privately talking about a getaway in the Philippines for TFNN subscribers, all paid for by Tom. Just kidding. It is a great place to go and get away. Do not repeat that. All right, here we go. So let's take a look at a couple of things that I was going to, you listen to these guys on TV, and we're going to get into this a little bit more a little bit later, but, they've talked, and they don't a lot of times kind of go back and, resurface things that don't work out. So what I wanted to do, every one of them seems to be long Apple that I hear. We're going to just kind of take a look at this. The cool thing is on Apple, and this is very interesting how this happened. New profile appeared yesterday. As we were looking at this orange bar, it traversed the entire profile inside and outside. You rarely see that happen. And then we have a close above the profile from 129.63, and we're trading 130.41, and pre-market we're trading 130.02. So what does this type of action mean? We talked about staying away from this until we had a new profile up here. We had a new profile up here. We traversed down to the bottom of the box and then actually reversed and closed above. This is actually extremely bullish for this particular stock. And obviously it's a very big component in the NASDAQ. And as long as this thing's still sitting above or within profiles and never closing below, and that breadth is staying positive, that's just going to be something that the guys who are trading the NASDAQ are going to have to seriously pay attention to. Again, this was a heck of a day for Apple on the pullback reverse. It just means that there's quite a few people still, from a fundamental side and technical side, this is, again, not showing its hand yet. We're going to take a look at Boeing. This has kind of been one thing that I've been trying to pay attention to lately. Here's our weekly. Has done a moonshot, obviously, from 120 up into 160 in a pretty, just couple of months here. And what do you do now? Here's the long-term, 151.73. It's about where we're trading pre-market here. But after we traipse down back into these profiles, what do you do now? So we've pulled back, about 7 or 8 points. I think that the play here is really to still sit tight as far as buying this thing. Like we talked about, this has some market relevance. And, we're right at the top of the box here. We're kind of trying to seemingly compress down into this area. You want to see stocks get away from these inflection points. Boeing doesn't look like it wants to, so the better buy point on this is more than likely going to be around that 148.26 area. But again, if the breadth on the broad market starts turning around, the S&Ps want to start drifting a little lower. When we get to this area, and if any type of breadth crossovers happen, you're going to probably have to ignore that. Now, if it hangs in there and the S&Ps fall apart, then you've got a good relative strength trade there, but you're just going to have to pay attention. I don't think that the buy point is right here, right now, because the S&Ps could relax a little bit more, and you're going to have to kind of reassess things, I think, a little bit lower at 148.26. Now, is there a short-term trading opportunity on Boeing to short it right now for 3 or 4 points down? I think you've got better candidates on the short side, and that's why we always use the scanner to try to figure out some relative strength situations here. And as we look at these, I do actually see a lot of energy type related stocks, which is and this is on our daily. We've kind of come below profiles as we have the XLE and crude oil pulling back a little bit, but I'm not a big fan of selling these energy stocks. And as I look at some of these, the property groups are in here, Wind Resorts. I hear the music. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I'm looking at the Shanghai, taking a departure of what we were talking about before. Somebody was asking me about this, and we talked about it the other day, some guys in Asia. So we talked about getting the close above. We actually closed above, routed around. That's what, a lot of these inflection points, you got to give yourself a little bit of a noise factor. And had the moonshot, and we're off to the races again. That's what we were considering. And the reason we were considering laying off the shorts on this one also is because as we look at our breadth, as they say in North Carolina, viola, here we go. Breath positive, all systems go. Block out the short side. That's what we've been talking about for a while in the Shanghai, and no reason to change the tone there. We're going to take a look at some stocks here that I'm personally interested in. Texas Instruments, Texan, as we used to call it. All right, so talked about laying off this because of the NASDAQ on the short side and trying to buy breakouts. And now what do? We've broken out and we're in kind of the ether up here. So what's next for this? And as you can see, it's really weathered some storms on some pullbacks and some rattling around the indices altogether. And this has been, as you can see, really used these inflection points to move higher. But again, what's the story now? The 240s, we always talk about using the 240s to regulate the trade. I personally think that as we look at this, we've got 58.46 and 58.55 sitting here. there's no reason to not be stingy right now because the market is completely, new highs, things on their highs go higher, but any type of disturbance up here, the one thing that cures high markets is high markets. So you got to take that into consideration here. And any types of cracks on Texan below 58.55, 58.50 with closes below, I think you can just sit on the sidelines for a while and just say, you know what, this has been a great run, and I'm going to wait for some new information to appear and some borders to be crossed again above that 58.50. Right now, it's just kind of a hang on and trailing stop situation, but I think you got to look at this a little differently if we start getting back down below 58.50 and especially below 57.13. But that 58.50 area will be kind of the 240s regulating the trade up, and you want to just kind of use that. If it ain't broke, don't fix it type scenario. Now, these are, that particular stock has, with the, let me just pull up this. Sorry to be stuttering this morning again. XLK. As we look at the technology sector in general, these are our weeklies. That technology sector you got to pay attention to also relative to Texan is 42.58. That weekly border up there, as you can see, we use these inflection points very nicely. But we've got a new profile that's appeared on the daily. We're sitting right above as of yesterday. This may relax a little bit. So Texan could, or Texas Instruments could start looking a little bit weaker based on that. And you may have some lower buy points and ability to save some money on the stops, for trailing stops, that is. So just be aware of all that. Let's take a look at Amazon. Well, if I could type the symbol correctly. Amazon. All right. So a while back, we were talking about this company having a lot of, hills to climb, and we were sitting down here on the lows. We were talking about passing on some buy points down here, and that's why I'm kind of bringing up the things that, we didn't take advantage of on a full-blown sell-off here. The market has significantly helped us since it started moving up, and we talked about that. And that's why we look at the breadth and the broad indices to try to get this was a kind of a relative strength situation on the short side. We never had that weekly close below, and then all bets are off. So we never got that weekly close below to really start pounding this thing. And that was a trade that was obviously, not caught on the long side. We talk about always trying to buy strong stocks in a market that's, looking a little weak or looking a little scary. This was not one of the ones that we had put on the radar screen to do that, but this particular stock, as you know, has had about a 25% move since we, opted out on some of the longs on this. And when we got the, obviously the close above weekly profiles, that allowed us to start looking at this from the long side. So this is the border on Amazon, 370.85. We're not going to catch every move from the bottom, but 370.85 is going to be where you need to orient stops around this particular trade, in my opinion, and that's the profile unfair high. Got a couple of emails about that. We're going to take a look at Target. Here's our 60. Here's the profiles on Target on the weekly, 75.73. To be stingy, that's where you're going to place stops below that. These are not stocks to be shorting. These are some strong stocks I'm showing you right now. We're going to get into some weak stocks in just a little bit. We're going to take a look at Facebook. Got a couple emails about that one too. This was what we were kind of wanting to see for a long time on Facebook, that close above. We had a retest that was a little bit more violent than what I wanted to see. We haven't eclipsed these all-time highs recently. That's what we're gunning for next. Stops oriented below 79.27. New profile has appeared on Facebook as of yesterday or the day before. But again, we're going to focus on those weekly numbers on Facebook, and the targets above we're going to want to see are 8217. Okay. These aren't big moves. I'm a little scared to get super long right now because of those index values and what's going on with the breadths. and some of the new information that's appearing. All right, let's take a look at IBM. Now, the other day, this was the, this area right here, this was a little nerve-wracking, but 163.09 we talked about was a big number to pay attention to. IBM, obviously, in a big, the only stock in the Dow that was actually down in 2013, and then we started getting the super cracks in the armor with some of the statements that they made around earnings. This is going to be something now, and I got stopped out a little bit there on the day before yesterday on this trade, but above 63.09, still putting the buy stops up there and waiting for this thing to fall apart even farther down into 155.90 and even lower is the way I'm looking at IBM. A little bit of market help on this particular stock would go a long way, because remember, we've got a weak stock, a relatively weak stock in a strong market, and the market itself dragged this up the past couple of weeks on the, the S&P move up and the Dow and the NASDAQ move up. This is, again, I think a very low risk trade from the short side. That's how I'm looking at IBM. All right, next we're going to take a look at Twitter. As this populates. Yeah, some guys were asking about this also. I think you've got better long candidates, and I actually think that from the short side, if we can start getting some closes below 48.50, this actually might be a good short candidate. Not a big fan of this stock, fundamentally or technically right now. Adjust my screen. Hold on a second, hold on, guys. All right, we're going to take a look at FCX. If I get this to park, there we go. All right. Obviously related to mining. This is weekly unfair highs we're sitting at right now. The trend is, it's been broken technically speaking. Last week we had the close above. Let me just tell you where it closed. 21.28. Those unfair highs are 20.91. So again, we've come up to the top of the profile. We're taking a look at this. Here's the action, top of the profile on the daily. Is this a short? Again, this is something I'm going to have to say that you've got better long candidates out there. Is it a short? I think you could take a shot at it and obviously put stops oriented based on your appetite for risk above 20.91 on Freeport. I don't like it as a long. Let's see. BlackBerry. All right. This is the eternal question. Will this company stay in business? Does it have a lot of upside at this stage? The only upside I see for this right now, and I use a BlackBerry, is short squeeze. How do we get a short squeeze in this? I don't know the next trigger point in it. I'm a little scared to go short this stock based on all the shorts out there in this stock. Closes above 1137, I think you can start paying attention to it. We've had those situations happen before, stop outs. Guys were asking, is it time to buy this thing based on some of the fundamental things I just said? I don't think so, but that's kind of the take on it. Here's the daily situation. Just wanted to put that out there. All right, here we go. Let's take a look at some of the things on the scanner we talked about from stocks that are showing their hand possibly on the weak side. Let's take a look at Avon, AVP. And this is, I got some questions from some girls about this actually, or ladies, women, excuse me. What is, is it a buy? No. That's the answer to that question. Is it a buy? No. We're going to take a look at a couple other things on the scanner here, and we're going to try to pay attention to some inflection points as we pull them up. And again, a lot of these real estate type related stocks on here, and they've made some moves recently. Let's look at Boston Properties, because it's got the word Boston in it. And let me pull that back up for 2 seconds. All right. Tom was actually looking at these and really spot on, dead on with this particular situation. Started showing some cracks in the armor, getting down below this 139.77, and then we had the new profile up here. If you can look at this from a relative strength standpoint, the scanner is going to pick this out and give you the levels to pay attention to. I still think this thing could have some downside stops above 138.84 for the sells. And here's the 240s kind of regulating this thing down. Let's take a look at a couple of the names that we need to pay attention to. Let's take a look at Staples. Can't type the symbol in correctly. Hold on. SPLS. I can't see today, guys. I rolled over my glasses last night, so I got another pair. Not your fault, my fault. Here we go. Here's a long term on Staples. $16 stock. I think this is a do nothing right now. I'm looking at this. You got some short opportunities here. 1673 based on the concept we've been talking about. The do nothing part is stops above 1673 if you're short, with targets down below 1545. A lot of people don't like the short stocks in their teens or even below 10. The do nothing for longs is just sit tight until 1545 is hit, and then you've got a trading opportunity on this. Let's take a look at a couple other things in here. Hewlett-Packard. I think somebody asked me about that the other day, and I never got a chance to look at it, and I apologize. We'll take a look at it now. Obviously, some news out, and before earnings announcements, before news announcements, my position always is and will be not be in the market. I mean, if you roll the dice on earnings, you'll be right over time, 50% of the time. But these types of pullbacks can severely damage your account. These types of pullbacks could be 50% pullbacks on an earnings announcement. But Hewlett-Packard, what do you do with it now? There's nothing to glean information off of here down below. Is it a buy? In my opinion, no. And you've got some serious technical damage that's happened in this stock with the breakdowns below weeklies and dailies. But again, you got nothing to hang on to down here, nothing to short it off of, and nothing to go long. So we're just going to have to wait until some new information appears on Hewlett-Packard. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. I think we have a caller, John from Philadelphia. John, you there?
Hey, John. Thanks for taking the call, sir. Didn't want to have you speak all hour just solo, so I wanted to ask you about silver, John. Silver's coming on in. I'm wondering if we can take a look at it in some detail. I will also tell you something I've observed over the months that you've been associated with Tom O'Brien and TFNN, namely when we go through time periods in which futures contracts are rolling from nearby to next, I often observe that the CAS market profiles, the figures themselves, be it weekly, daily, tend to change abruptly, and my suspicion is that has something to do with lack of volume on the forward month as we come into roll. Could you just highlight what goes on there, but more importantly, look at silver, generally speaking? Is it coming into a tradable low near 16?
Yeah, that's a great question, and thanks for calling. Hope you guys are getting warmer up there someday.
Someday, not today, man.
It's actually kind of chilly down here today for me in Florida where I'm at. But yeah, it's a great question. You know, we've been round and round internally in my company about this. You know, with the disparity in the relationship, for instance, between November beans, January beans, March, May beans, I'll just use that for example. We've really determined that trying to mesh those together in a continuous contract it's not absurd, but a lot of those months have nothing to do with each other, especially on the grains. And on silver and gold, I understand that that's a pretty good correlated situation. We probably should use continuous contracts to look at that, and sometimes those profiles do abruptly change. But the problem, and again, our information is very predicated on volume to output these profiles in an automated algorithm that we have. But
yes,
we've literally this is just we could talk hours about this, and I'm going to just give you the Reader's Digest version. The different platforms literally treat continuous contracts differently, and they mesh them together differently. They have their own formulas to mesh them together differently. And since we're on, I think to this date, I think we're on 9 different platforms with this information, and we have our own platform, which I haven't showed you, which I'll tell you what, I'll flash that tomorrow. If you use continuous contracts, then on every platform, we seemingly have different levels because they chop them off at different time frames, calculate things a little bit differently, and it really screws us up. So we just went really to the raw contracts based on what I said about soybeans and what I recently said about, with the rollovers. We're just going to stick with the raw contract, and I wish we could use continuous contracts a lot, but we can't. To get into silver, the bottom line, in my opinion, as we spoke of the other day, this is the March contract, around 1581 into that 16 area, that whole number, that's going to be the area to pay attention to. I guess this week we have been as low on this contract as 1604. I think we could rattle around a little bit lower, but this is the area that I'm looking at, around the 1581 on the March contract. And I know we're getting into May now, but that's my 2 cents. And I really appreciate you calling, John.
Thank you, John.
You're welcome. Guys, have a good trading day. We'll pick it back up again Monday. Thanks for hanging in there this week when I was on the road. Steve Rhodes is next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.